All right, good evening, everybody. We're going to start here in just about 2 or 3 minutes. It's almost the official start time. Again, we're broadcasting right now, both into our go-to webinar. We're broadcasting directly into our TheoTrade chat room. So quite a bit of technology that we're rolling out over here. We have a lot of people on tonight. I'm going to try to do my best to be able to answer questions. A couple of housekeeping items that I like to cover right up front. Number one, is this recorded? Of course it's recorded. Why? Because I probably speak at a pace of about 180 words a minute. Yeah, don't hold it against me. I was originally from New York. All right. So, by the way, feel free to chat in. I always like to know where everybody's from as we do get started here. So I speak rather quickly. We've got, I don't know, 80, 90 minutes tonight to get through a tremendous amount of material. So everybody's aware. You're in Phoenix. Well, I can see you. By the way, I'm broadcasting directly from Scottsdale, Arizona. I live in a mountain, in a cave. Not too far from it, but I am broadcasting from Scottsdale, Arizona. You know, I did my time in Chicago, and if you've ever been to Chicago in February, yeah, not good. Anyway, with that, I kind of get a little bit of a rolling start going over here because I want to make sure everybody hears this all right. You should see on your screen right now, it's the Thinkorswim platform. It's the Analyze tab. I decided this evening, no slides, no brief introductions. We're just going to go for it because there's so much to cover inside of this Analyze tab, and that's where I'm going to get started here. So it looks like we're just about at that time. And again, I'll make it official here momentarily as we get rolling. So again, a couple of housekeeping items. We record everything, and this particular demonstration, we'll put it on, our site, on YouTube. We'll put it everywhere so you guys can have it. I like doing this stuff, so by all means, if you've got questions, feel free. You'll be able to fire them in as we go along tonight. And again, do not hesitate to ask questions this evening. I'm pretty good at reading, talking. I've been doing demonstrations like this for quite some time, especially in the Analyze tab. So we'll talk and walk, and well, let's officially get started. With that, all right, welcome everybody. This is typically what we call the options happy hour here at TheoTrade. What does that mean? Well, we pick a particular topic every Wednesday evening. Tonight's topic obviously is the Thinkorswim Analyze tab, and in all of its glory over here, we're going to cover the Thinkorswim Analyze tab. I'm going to let you know right up front, as I said a minute ago, it's everything's recorded, so stay tuned in, turned on. You can always rewind it, listen to it again later. There's a tremendous amount of material to cover tonight on the Analyze tab. I also want you to know we're going to go into some depth tonight, so if you're a little newer to this and you don't grasp everything the first time around, let me tell you, I'll give you a little background on myself. Again, my name is Don Kaufman, co-founder here at TheoTrade. As I said, I don't want to have any slides, nothing tonight. It's going to be all about the Thinkorswim trading application. The reason I'm doing this tonight is, we have hundreds and hundreds of emails that came in. I did just kind of a full-blown Thinkorswim demo a couple of weeks ago, and the number of hits it received, it was, again, fairly impressive. Numbers of people watched that. So everybody kept emailing us and saying, you got to do the Analyze tab. Now, I have a pretty, definitive knowledge of the Analyze tab here on Thinkorswim. For those that don't know a little bit about my background, I started trading in the late 90s. A short time thereafter, I was invited into what was at the time was a startup brokerage firm. When I say startup, I don't know, there were like 8 people working there. They said, hey, kid, you know a lot about options. Come on. I came from a family that traded options. Anyway, I started working at this company called Thinkorswim. So I've actually been on the Analyze tab since literally build number 1. And there are a lot of features in here that I had tremendous input. I'm not the mathematician, and was not the mathematician at the Thinkorswim, in the beginning, but I was involved very heavily with creating some of the features in here. So I'm going to cover some of that. And I'm also going to cover the good, the bad, again, kind of the ugly, some features that you may or may not be aware of that are in here. So without further ado, let's get rolling with it. Okay. One of the first things I want you guys to know is every piece of technology that I'm using tonight, I'm on the same Thinkorswim everybody else is. I get that question all the time. People are like, well, you have some special features. I don't. And I'm in the Analyze tab, and I also want you to know I just closed up this left side bar. Like I didn't want to be distracted by the left side bar, so I just closed it up. That's it. Okay. So from here, we're in the Analyze tab, and yours might not have this cool risk profile. Guess what? I've actually got some simulated trades in here, and I'm going to teach you how to do that, and that's exactly where we're going to start. So from the beginning, here we go. I'm in the Analyze tab. The Analyze tab is actually broken into subtabs. Add simulated trades, okay? Our risk profile, of course, this is what a risk profile denotes. Probability analysis, right? And you know, the first time you see this thing, come on, let's all be very forthright with one another. The first time you see this curve, you step back from it and you go, all right, that's it, I'm done. I have no clue what the heck this thing does. It's actually really simple, and I'll explain that. But I might actually built the curve, the first thing. This is actually in build number 1 too. Now, we're not so much going to get into economic data. Oh, I see I'm flashing over here a little bit, so bear with me as I go along tonight. I'm not so much going to get into economic data, but I will talk a little bit about Think Back here. And Think Back is really the first stab at back testing, and there's some very, very finite features that I want to cover inside of the Think Back area of this. So predominantly tonight, we're going to be talking about risk profiling, probability analysis, okay, and last, Think Back. When it comes to economic data and fundamentals, all right, best left for another day. So let's start first and foremost with the risk profile, okay? And again, I see some flashing on the screen over here, and hopefully I will be able to resolve that as we go along. One of the things that I like to start with when I talk about the analysis is when you first go into the Analyze tab and you've played with it a little bit, you should reset, okay, the entire application at this point. And again, I see us flashing here, but we'll be all right, okay? We're going to work it all out here momentarily, but you should reset everything. And to ultimately do that, there's, well, a reset button, okay? So come in here, reset everything. It's a great place to start. So if you've got simulated trades and so forth, the reset button, that's not going to influence, okay, all these simulated trades down below. There's another area that I think is very, very important because some of you have been on the Thinkorswim platform for years. Some of you guys are brand new, and that's okay too. But if you've ever simulated a trade, so I just showed you the reset button. It's just this tiny little show actions menu in the upper right-hand corner. In fact, I'll even kind of highlight it with a pen over here. So it's right up here, okay? Once you know what this is called a show actions menu, and you will see them kind of listed multiple times out there. Let me go ahead and erase some of the drawings. All right, so as we kind of dig into this here, and I'll draw on the screen, a number of different times. As we dig into this, one of the things, again, that's I think so critical is that you want to reset everything. Okay, what people have done to the Analyze tab that can make it even sluggish, difficult to even navigate through, is they have put simulated trades into the Analyze tab and they forget about them. So if you're following along, you're playing like the Theo trade at-home game tonight, come over here to where it says single symbol and just click it to portfolio beta weighted for just a moment. Okay, you go to the click to portfolio beta weighted, and one of the things that you want to see in portfolio beta weighted, change from show all, come over here to hide positions. Now, what that's going to do, and again, hopefully we can fix some of this in the short term over here. I'm going to try to fix this real quick. There is no there's no tech fix for a computer issue that is apparently my issue. But when you go through here, and we'll see if that's a little bit more stable. When you go through here, again, portfolio beta weighted, come over here to hide positions, right? Now that you've done that, and by the way, if I continues to flash, I'll switch to a different monitor completely. Hopefully that would that'll also solve it. So bear with me here if I do have some technology issues. Yeah, I'll try a different monitor here altogether. So, somebody hears background music. That I am unaware of. All right, so let me just stop for a second. I'm going to go to a different monitor completely. All right, bear with me here momentarily as we again are going to be broadcasting a completely separate monitor over here. All right, and I promise I'll blow up the fonts, make sure everybody can see everything that we're doing. All right, there we go. Possibly better. Hopefully the flashing is all but gone over there. And I know some of you guys are tuned into the TheoTrade chat room. Hopefully that that'll work out. Fingers are crossed over here. All right, so again, I'll recap for just a moment because I don't want to distract, any technology issues distracting from this. So if I come over here under portfolio beta weighted, okay, what it does, and you go over here to hide positions, is it brings up every single trade that you've ever done. Like literally, every single simulated trade you've ever done. And one of the issues with that, okay, is that when you go in here and you see all these trades, there could be literally hundreds of trades. You have to go and you have to delete all the simulated trades. So come over here, right? This little show actions menu right here, and I keep clicking on it. It's not flashing. I'm doing that intentionally. Come over there, delete all the simulated trades. And it's a place that, well, you got to start with the Analyze tab. So with that, now let's jump into some of the features of the Analyze tab itself. Okay, one of the things we want to cover up front is this is your risk graph up top. Most people have seen risk graphs before, but the interesting thing is the risk graph, it's probably one of the more friendly tools on the Analyze tab, but the irony is it's not even the most useful tool on the Analyze tab. There are some features in here that I think you'll be blown away by tonight. So I want to go and I want to add simulated trades. Now, frankly speaking, you can go into this, add simulated trades. I don't use that. I've never used that. Okay, and I'm going to actually show you the reason why I don't use that. Again, I'm going to get into nuances that nobody has ever even thought of before. I go to the risk profile. I jump directly back to the trade tab itself when I want to analyze different trades over here. So let's go through, and by the way, feel free to, if you guys want, you guys can jump directly into the GoToWebinar for those of you that are over there in the TheoTrade chat room. So let's go in and let's analyze a trade. Okay, what does that mean? Well, let's just go analyze any trade. It doesn't matter. Let's go into Apple and let's, for example, buy a call, just an at-the-money call. I do not like or recommend this trade. But all you have to do to buy a call is left click on the ask. Again, I'll delete it out. Left click on the ask. Left click on the ask, it drops it into the order entry. Now, from the order entry bar, how do you get it to the Analyze tab? The easiest way is anywhere on the order itself, and you can see my mouse kind of perusing the trade. Anywhere on the order itself, right click. When you right click, just cruise down to Analyze the trade. So let's do it. Let's click on Analyze Trade. Immediately, it dumps you into the Analytics tab, okay? Loads the trade into the risk graph. Now, I'm going to show you that, okay, again, but I want to get into some really finite details, and one of them is right here. Do you see this little lock? Okay, there is a lock on your screen right there, and that lock is critically important. And the reason that I use the trade tab, watch, I'm going to delete the trade out. Now I'm going to come back to add simulated trades. From add simulated trades, I'm just going to go ahead and I'm going to open up the Analyze tab, and I'm going to click on a call. But if I click on a call, then I have to go back to risk profile. There's another call option. What's the difference? Everybody goes, Don, come on. Why do you actually add simulated trades from the trade tab? Why don't I add them from the add simulated trades? Well, one of the first things you're going to find out, one of the nuances of Thinkorswim, if you add trades from right here and add simulated trades, if you do that, you will notice the lock is unlocked. That, people, is no bueno. Okay? No bueno. So let me just fix something here. When you are doing this, when something is unlocked, what that basically means is the price is going to float with whatever the market is doing at the time. And ultimately, you cannot analyze a trade if the lock is unlocked. I want to make that explicit, okay, implicit, whatever you want me to say for you to know to lock the lock, because the single largest mistake made on the Analyze tab of Thinkorswim, for 15 years I worked there. For 15 years I watched people try to analyze with the lock unlocked. And basically what that does is this. As the price of the stock moves, well, guess what? The trade moves with the price of the stock. So you can't really analyze a trade. It has to be locked down. Therefore, if you ever learn how to do this, just come right here to the Trade tab, right-click on the Trade tab, go to Analyze Trade, it automatically locks it for you. It's the single best thing you could possibly learn, like on that platform, in terms of the analytics. Now, that's just buying a call option. Let's go ahead and delete that out there. We're going to go back to the Trade tab. We're going to step it up a little bit. Yeah, because buying a call is just not that much fun. Well, let's do something like a vertical spread. What's a vertical spread? Well, we're going to buy one option. We're going to sell another option against it. Now, Apple has earnings coming up, but listen, that's kind of neither here nor there. I'm not too concerned with Apple's earnings. So in this particular example, I don't care. Close this up, maybe use like the 30-day options in here. We're going to have a party. What is it? We're at 113. I'll do a 114, 112 spread for like $1. Right? Let's just, hey, we're going to analyze it at $1.03. That's the real price. That's the mid price. This is the spread. It's the 114, 112 spread for $1. Right-click on the trade. Come over here to analyze it. Now, this is a bearish trade. That's the risk graph that everybody's like, oh, man, I like it. You're like salivating over the risk graph. Okay, time out. Focus on the risk graph on the top of the screen over here. And this is where, wait, I got to bring some tools into play over here. When I say I got to bring some tools into play, I got to get my pen ready, all right? Because I've got a pen, and I want to make sure that everybody sees precisely what I am going through on here. And I'm going to try to pick, pretty obvious color as well when I start to highlight the screen. Nevertheless, with the pen, what I want you to see right here, this hard line right there, okay, that happens to be the expiration graph. The softer line that you're looking at, okay, that is right here, right now. That's the difference between reality and not reality. Again, with talking about the Analyze tab, and again, you'll follow my little pen on the screen here because I'm going to use it quite a bit. When talking about the Analyze tab, you have to get through the truth and the fiction of analyzing options trades, or stock trades for that matter, because you could use stocks, options, futures, okay? All of the above could be utilized in here, and I'll show you actually how to use a conjunction of stocks, options, and futures as we get a little bit deeper into this. But one of the most important things I'm telling you, number one, you better be sure this thing is locked down. Number two, don't trust at expiration, because how many of you legitimately hold trades to expiration? Think about it. Expiration, when is that? It's the Saturday following the Friday. I can't even say the third Friday because there's weekly options now, and every single week is expiration week. But the Saturday following the third Friday of the month, that's not reality. And that's one of the things that I'm going to talk about extensively tonight, because I want to denote time and again, what is reality and, well, what's not reality. So how can we get through this? So let's play around a little bit with the risk graph to begin with, to make the risk graph, quote unquote, more real. So on your risk graph here, okay, on your risk graph, that softer line, that's what your profit and loss is going to be right now. And again, to really familiarize yourself with the risk graph, down below, this is stock price. So right now we're trading basically 113. We can go to 114, 115. Now you can take this and drag it out. I say take it and drag it out. You can kind of like zoom in. It's a little bit of a pain to do it, right? And then you can kind of left click, hold down, and kind of drag it back out so you can zoom in and zoom out. How do you do that? You actually grab, okay, left click, depress left click, hold down, and kind of zoom in and zoom out. And you're actually grabbing the price itself. Now, that's on the one axis. On the other axis, you've actually got profit and loss. Now, profit and loss, okay, on the vertical axis here, this profit and loss, that happens to be on however many contracts you do. So it's contract specific. So if I bump this to 2 contracts, it's going to change my P&L. If I bump it up to 5 contracts, it's going to change my P&L even more. So sometimes, like when you're analyzing trades, you kind of want to analyze like a 1 lot. It's just easier, a 1 lot or a 10 lot, right? So watch me now dragging the mouse. I'm dragging the mouse like a madman, and you can see down below, right over here, what is that? Okay, that is a profit and loss legend. And what does it have on it? It's got, number one, it's got a date. You're like, but that's, going to be what? Today's date. Well, it's really like tomorrow's date now, but, today's date, and then, of course, the expiration date. Now, that's if you want to look at what's called expiration +1. So here's where things are going to get much more interesting. Okay, now there's many different date boxes on here. We're going to get to all of that. When people come into like the risk profile for the first time, they're like, there's a date box up here, right? There's a date box right up there. So wait, I gotta get the magical pen again. There's a date box right up here. There's probability range over here. Did you know there's a date box also down here? Ooh, yeah, I mean, it's crazy. There's so many like features in here. Don't worry, I'm gonna get to all of them. I'm gonna do it right now. So let's go for it. When I say let's go for it now, there's no turning back now, right? When you're looking at your risk profile, it defaults, okay? It defaults to what's called expiration +1. And what that basically means is +1 at expiration. It means now and at expiration. That's it. That's it, nothing more, okay? Not sure why it was like showing yesterday or, tomorrow, but nevertheless, it's today and then it's at expiration, okay? And that's changed by right here, right up here, this little drop-down menu. So I don't personally love the default, this +1 at expiration. You're like, what's +2 at expiration? Well, if you had like calendar spreads on and stuff further out in time, you could look at like this expiration, another expiration, yada, yada, yada. Personally, I don't really like it, all right? First of all, I like single. What's single? That's just looking at today. Ooh, yeah, that's my P&L today. What's my P&L going to look like a week from now? Well, how could I figure that out? You got to move the date forward. If you want to see what your P&L is going to be a week from now, you kind of cruise up and down here, perusing the P&L. If you want to see what it's going to look like a week from now, there's a date box down below. Here we are on October 5th. Just put it to the 12th. And what's going to happen is you'll see this line start to mature. Now, if you missed it, watch. Go to the 5th. Okay, great. Go to the 12th. Woo, there's movement. There's movement in the tree line. There's an easier way to do that, though. It's just a single plot line. You can actually do what's called a date step. What's a date step? A date step is now, okay, and a step into the future. But again, I don't really love that one either. All right? Probably my favorite is to use what's called day stepping. Day stepping is just spectacular, especially for newer people that trade options. You go +1 at day step, +2 at day step, +3 at day step. Let's do +4 at day step. You're like, I don't know what it means. Oh, this is where the pretty lines come out. I'm just making it look like spectacular for you. What you're looking at here, and then I'll mark up the screen. I like to consider myself, it's the John Madden of trading. Okay, down here in the legend, you've actually got what? Today, you've got the 12th, okay, the 19th, the 26th, and what? November 2nd. That's because I set it to what? +4 at day step. What's the step set to? 7 days. That's why there's 7 days in between each of these. So each one of these lines represents the trade maturing in 7-day steps. So you can literally see what the P&L is. You know, the thing is, people show options and option trades all the time. And when they show option trades all the time, what a lot of people don't really realize when they show the option trades, they're usually showing it at expiration. At expiration is a figment of your imagination. It means nothing, okay? It's just, again, it's hopeless because you're not going to hold the position until expiration. Probably my favorite is when somebody shows a picture of like a butterfly. I'll show that a little bit later, and I'm going to show you the reality. It's what I call fact from fiction on the analytics side of things. So erase all my drawings over here, and I'll come back and display this. Now, as fast as you can drag your mouse, it's actually going to give you P&L for specific dates and times. So bear with me, okay? Watch down here. Watch right down here in the legend, and watch me dragging the mouse. It's going to show you there's different profitability for different trades, okay, at different steps, because your option trades mature through time. Whether you buy a call, whether you use a spread, this is the most efficient way to look at any option trade, is to see how the trade is maturing through time, okay? So again, how did I do it? Well, let's go back and let's reset everything. Like legitimately, like reset everything in the entire Analyze tab. The only thing that I'm leaving in there is the trade itself. So I did a 114, 112 put spread, okay? Now, we haven't covered anything about price slices. Don't worry about that. I see the questions already coming in, right? So let's move forward. So you're like, oh yeah, I'm gonna make money on this thing if, like, you know, we go what? We just got to go down to 112, and I'm gonna be fully profitable. Well, think about this. That's what this trade looks like. You're buying a 114, 112 put spread. You want the underlying under 112. So as long as you just get right here, you know, basically to 112, you're fully profitable. Please, come on, look at the risk graph. I mean, today, like, you need this little monkey all the way down to like 102 to make it worth your while. I mean, that's some serious movement, right? So you come over here and forget about all the other like fancy tools in here. Just come over here to day step, +4 day step. Now, if your trade is only for like a week, what you'd want to do is knock the day steps down to like 1 day in between, because then you're like the 6th, the 8th, 10th, the 12th, the 14th, right? But I've got a little bit of time. I got some time to play with it. And if I go to 8 days, you'll notice it'll actually run through expiration. That's no good. So you kind of play with the day stepping a little bit. And I wanted you to see me doing that because I've been playing around on it for, I don't know, since 2001, and it's not fair. I got to show you like little tricks in there to make it more viable for you. 7 days for a trade that's out of just over a month, though, is viable. And again, it'll show you today, 7 days from now, 7 days from then, 7 days. All right, so that's one of the first little, like, I guess, gizmos on here. Now, let's start to get a little bit more extreme. We okay at this point? Deep breaths, right? So breathe, because we haven't even really started yet. I'm just having fun at this point. Okay, we got to make sure that we have our full amount of caffeine. It's late here, but that's still all right. Okay, let's get into it now. As I start to move my mouse, all right, specifically on this P&L line, what it's actually going to show me is how much in dollars and cents that I'm going to make. All right, so as fast as you're dragging your mouse, it's actually showing you if you do one contract, you're going to make $88. If you do 10 contracts, for example, let me bump this to 10 contracts. Look, now it's actually going to show you in P&L. So perfect. Let's continue on. Before I start messing with contract size and really the finite details, we got to start to move into probability a little bit, because a huge amount of the analytics tab is based on probability and volatility metrics. And here's the part where I got to tell you again, okay? And remember, I'm saying this. You could watch tonight's presentation 4 or 5 times, and you're still going to be picking up pieces of it 5 times into it, all right? Because there's that many features that I'm going to cover tonight. All right, so moving along over here, don't worry about the metric P&L open. Don't worry yet about in the money, out of the money touching. We'll come to that. Here we actually have a date. The first date that we're going to be concerned with on the screen, and this is very important, all right? This is your probability date. So if you're going to label something, okay, in your head over here, right up there, this is your probability date. What a probability date does is the probability date should mirror the expiration, okay, of the trade that you've pulled up. Again, the probability date should mirror the expiration, if it's an individual trade, of the trade that you've pulled up. Now, you may have 20 different trades in here. You could probably analyze 5,000 positions simultaneously on Thinkorswim. They don't care. Just the limit of your computer over there, but you know, and it's a lot of positions to calculate. Nevertheless, here we have a November 4th expiration, but you'll actually see the date set to the 5th. This is extremely important. When it comes to probabilities in options, you set to the day after the set expiration, meaning that yes, this option, the last time you can trade it is November 4th, right? That's what the 4th of Nov means. But the irony is the actual probability, right, would be at expiration. And expiration itself is the Saturday following, okay, the last day you can trade it. In this case, it happens to be 11/5. Now, more often than not, the probability date will be set for you. But it's very important to know, okay, that you need to set the probability date. So you have to go in here and click the calendar and make sure that you set it specifically to November 5th, the day after. Now, I want to show you what happens when I start moving the probability date. There's a shaded region on this screen, and the shaded region is currently set to a probability range of 68.27. What 68.27 happens to be, it's one standard deviation. So it's one standard deviation. So what it's giving you is a probability. It's actually an expected move calculation. For those of you that know what expected move is, ultimately it says within between now and, for instance, let's just here, it's an abstract date, you know, but whatever. Between now and October 26th, we're expected to move this much. What is this much? Well, kind of from 120 down to like 106 and change. Or you can even do this for like any particular day. All it's doing is giving you a probability range. Okay, you know, 68% chance of being in a range. So I'll take it back though to 11, all right, 5, which is again November 5th. Now, you've gone in here, you set day step, you didn't mess within the money, out of the money, probability range, it's fine, 68%, because you could even come in here and do like, you know, 2 sigma. What's that mean? It's 95.45%. That's 2 standard deviations. 1 sigma, 2 sigma, 3 sigma is 4. It's like hot potato. And then, of course, again, you got the date and it's set. Now that you've actually done that, so, all right, we're okay. That's the risk graph. Now, for the first time ever, we're going to open up price slicing. Dun, dun, dun. By the way, there's music with price slicing over there, and it's ugly. All right. Again, we have a trade that's for the 4th of November, 2016. We have set the probability date to the day after. Again, very few people are aware of that. Should be the day after. The platform, most of the time, when you drop trades into the platform, it will default to the day after, right? The last day you can trade it. Now, I want to see the probability of this trade, right? How do I even do that? It's actually not that bad. What this price slicing can do, well, the price slicing, to me, before I go any further, I'm going to tell you this right now. The price slices, just this little bar right in here, is the single most valuable feature on the entire Thinkorswim platform, bar none. I'm going to say that again. The price slices feature that mouse is on right now is the single most valuable feature in the Thinkorswim platform, bar none. And to me, that's, again, saying a lot, because there's a lot of valuable features in here. Price slicing will save your life. And I'm going to show you why tonight. And that's why, you know, this takes a little bit of time to go through. So when you go into the price slices for the first time, all the price slicing does, okay, to begin with, it says 0, up 10%, down 10%. Look, here's the 0, up 10%, down 10%. 0, up 10%, down 10%. What is that? It's showing you, okay, and representative of what, okay, your P&L would be if, when it says 0, that means it's just floating live with the market. Right now, the market in Apple in the after hours here is 113.36. What would it be if Apple jumped up 10%? It defaults to up 10%, down 10%. What slicing does, okay, think of this price slices as a glimpse into your future. What can a stock do, right? If this is not that hard, stock can stay flat, stock can go up, stock can go down, right? Time can move forward, volatility can change. Any parameter in a marketplace can be simulated, okay, and synthesized into the future on the Analytics tab. The price slices are the key to this. If you get what I'm talking about right now, you're going to be just fine in this business, right? Let me show you what I am doing. Over here, there's a little plus. That's for adding slices. Right next to it, there's the Show Actions menu. This Show Actions menu is pretty powerful. You can set slices. Check this out, plus 15%, minus 15%. What do you think that does? It just sets the slices like way out of the money. Let's do another one. Set slices. Well, we already looked 10% up or down. Ooh, check this out. 7 rows of 5% step. Yay! What does this do? Up 5%, up 10%, up 15%. Down 5%, 10%, 15%. You're like, I don't want to go down. That would be scary. But if you did just one contract of this trade, just one contract of it, all right, bear with me for a second. You can see your P&L today if we moved up 15% on Apple or down 15% on Apple. Does that help you? That's one thing you got to think about, all right? Of course it's going to help you. It's a glimpse into the future of price movement in an underlying. Go back to set slices. One of my favorite slices that you guys should start with, $2 and $5. So instead of using percent, it uses dollars. Can Apple move up $2? Yes, go fish. Can Apple move up $5? Yes, go fish. Can it move down $2? Sure. Can it move down $5? So the one thing about the price slicing that's helpful to most clientele is, and I'll give you guys a kind of a little bit of glimpse into building this feature. When we were building this feature, we were building it to mirror what all of us, so most of us that originally at Thinkorswim kind of came from like a professional trading background. I specifically came from a very heavy risk management background. And what we would rely on a day-to-day basis in the risk management business is you rely, okay, on what's called a risk array. This is a risk array. It's a risk array that's a little bit more friendly maybe than what Goldman Sachs is using, but it's actually probably more useful than what Goldman Sachs is using. So the risk array, one of the most important things about it is there is no bias. It doesn't, when you're setting the risk array to the predefined slices, did you notice it's like, hey, up $2, down $5, okay? The way to think of the risk array, this is a game of chess. Markets are a game of chess. What can your opponent do? Well, the opponent being Apple, it can move up $2, down $2, up $5, down $5. What else could it do? Well, the date could move forward. Well, we can simulate all of that. But before we get to that level of complexity, let's just show you how to look at probability on this trade. You ready? Just come over here to set slices, go over to your set slices, cruise down, break even. Ooh, look at this. Different days in here. So you can set slices to the break even points on a multitude of days. And that's one of the most important things when you're looking, okay, when you're looking to set slices, for instance, to break even, it's going to start to give you a probability. So great. Now we're setting slices to ultimately a break-even point. All right. We've got the date set out there. The break-even point, it's all set up for us. And again, if you look at your set slices, break-even point, on particular days you can even set. And the fact of the matter is, it instantaneously can give you the probability of being above or below. Now in this case, I know it's maybe a little bit hard to see, but I set up a trade that's legitimately a 50-50 shot. Why did I do that? Because I just wanted to show you what a 50-50 shot looked like. It knows it's a 50-50 shot, see? It's showing about a 49.85%. Down here is about 50%. Now, we could do a trade that had a little bit more oomph to it, but what's cool about the slices, okay, and this is a relatively new feature, You can also look at the break-even point, for instance, on 10.6. And it'll show you the break-even point on 10.6 is closer to, what, $113.29. So the break-even point will change based on different time before expiration. And again, it's an incredibly powerful feature. I know there's a lot of steps to do that, right? Don't panic because, again, it's all in due time. This is like one of the things that you go through and you have to listen to it like 4 or 5 times before you learn how to really analyze your trades. Then somebody shows you like, wow, look at this, up 15%, 12%, 9%. I'll show you exactly what that's for later on. So let's reset all the slices. Starting to see how the slices are powerful? Okay. Everybody all right at this point? All right. Doesn't look like there's too many questions over here. I'm looking on here. What are the red vertical lines on the graph? All right, so these red lines on the graph, I'm going to be specific about that, that is the price slice itself. So these red vertical lines on the graph, those are the price slices. So if I move a price slice up 15%, okay, it actually is going to move that red line. If I reset that to 6%, it's going to shove that line a little closer. So those red vertical lines are fairly definitive. On top of it, there's probability calculations that are appearing on the analyze, all right, on the risk profile. Those probability calculations, again, are based on whatever date you have set in here. And this is a probability, but a probability of what? Well, it's the probability of being between 113, okay, and 120. That's the probability being between. Now, what's the probability of being above 120? There it is, 19%. So let me mark up the screen here a little bit so everybody's familiar with this. But right there, that's the probability, again, of above 120. The probability being between those points, here's the probability being between these points, right? 44%. And then there's only about an 8% chance of being below, okay, 102. But that's a probability, again, by 11.5. All of these probabilities are strictly based on what factor? Okay, they're based on the factor that you haven't manipulated the date, because the date, it matters. And as I start to change the date, you'll see all the probability calculations are going to change as well. Okay, time out for a second. We'll make sure everybody's good, make sure everybody's in line, because we're going to keep on moving over here. So you can analyze virtually any individual trade, or you can analyze hundreds of trades, which I'm about to show you here momentarily. All right, let me look at this. So if you had slices at 10%, would the probability be the same on both sides? Theoretically, yes. So this is actually a great question. It really is a great question. She basically said, well, if you set the slices up 10%, down 10%, which I have them set to right now. So I just went out there and set the slices up 10%, down 10%. Up 10%, it's about an 8.67. Down 10%, there it is, about an 8.2. So why is there some slight differentiation between them? Well, the Analyze tab is pretty smart. Why is the Analyze tab fairly smart? Because, well, number one, everybody that used the Analyze tab, I mean, in the 15 years it took to build this beast, we trade. We trade a lot. So we were sure to incorporate things like yield. Now, yield is dividend. Dividend has an impact. So the chances of us going up 10%, the chance of us going down 10%, well, dividends have an impact in the option pricing model. Risk-free interest rate, right? There's an interest rate associated with this. So that has an impact out there. You're like, what? There's an interest rate associated? Of course, right? It's all, look, there's the interest rate right there, 0.5%. So there's going to be very, very mild differences between those two, all right? All right. Somebody's saying, this is the first time I've seen the value of the Analyze tab, okay? You've avoided it. Don't avoid it. I mean, this thing, it takes time, but I am telling you, the Analyze tab, you haven't seen anything yet. What I'm about to show you here is ridiculous and astounding. So it's going to get deep, though. And one of the things that we try to do at TheoTrade is like every single day, like I'm going to just bombard you. in 90 minutes, but every single day, you just got to kind of chip away a little bit. You don't have to tune in like every single day, but I'm saying like every day, you know, you unleash just a little bit more of analytics, because the more you know about option pricing, okay, the more the Analyze tab is going to make a degree of sense. So let's go in there, and I'm going to let you guys choose what's another trade that we might want to put in here. Huh? Anybody? Okay. I'll tell you what. I'm going to pick one. I'm going to pick one, and I'm going to put it into the Analyze tab. So I just blanked out the Analyze tab and deleted the simulated trades. I can also look at my own positions in here, but that's neither here nor there. Where's the fun in that? So I'm going to go into the Analyze tab, and I'm just going to reset everything. Once again, I reset everything, blanked. All right, we can use Apple, but if you don't want to use Apple, that's fine. Wow, people are getting like all testy about it. Okay, here, let's go use the spiders. Spiders or the SPX or something like that. So we go into the spiders. And one of the trades that I see, and by the way, I've got all kinds of risk twist spreads and stuff on this. You know, if I go to the Analyze tab, this is my own position right now, just in the spiders. So just the spider position. So my loss is negligible, but my P&L, if the spiders tank, could be huge. And I've only got like one lot trades on in there. So these are RTS, or risk twist spreads. Anyway, I'm going to go and I'm actually going to create and analyze a very, very common trade that is just a huge misnomer in this entire industry. And you want to talk about something that it really kind of gets to me on a day-to-day basis, where I see people doing trades that you just don't have good probabilities associated with it. And one of the things I'm going to do is I'm going to build a butterfly. So I'm going to build you a butterfly, right? So I'm going to build this butterfly, and if you've never seen a butterfly before, well, guess what? You're about to see a butterfly. Dun dun dun. So I'll do the let's do the 115, 118, okay, 121 B fly. So there's a $3 wide B fly for a 64-cent debit. Ready? Right click on it, analyze the trade. Okay. Now what we have here, ladies and gentlemen, is a little bit of an issue. I have trades on in the spiders, and I have a simulated trade. So the simulated trade can have an impact on the trades that I really have on. Now, I want you to differentiate these, okay? The trades that I have on are not shaded. They're just dark black. The simulated trade is in the shaded region. Now, what you have the ability to do is down below here, you can go hide positions, just look at the fly, or hide simulations, or, okay, show all. Why is that important? Because I can take positions that I currently have, and I can simulate other trades with positions that I currently have. Is that important? Yeah, you better believe it. You know, if you've got a big position on, and all of a sudden you're trying like, oh, I want to hedge this, I want to take off a leg. Come on, you can simulate it. Look, I can simulate everything in here. Look, check on, check off, check on, check off, check off, check on, check off, check off. Wow, check on. You can like take off legs and so forth. But in this case, let's go easy on you. Let's go over here and let's go hide positions. So what we're simulating right now is, to me, one of the most infamous in terms of misinterpreted trades in the entire industry. And it just gets me infuriated on a day-to-day basis, because I get emails about butterflies. Like, the butterfly is the greatest trade ever. Okay, first of all, brokers love butterflies. Believe me, I was in the brokerage business for 15 years, right? They love them because it's a three-legged beast, and you have to place a lot of them. Butterflies are rather low probability trades, but from a risk graph perspective, man, they look pretty sweet. Because in this butterfly, this is only one contract. Let's bump it up to 10 contracts. Yee-haw. If you do 10 contracts, do you realize how much money you could make? Come on, look at the P&L over here. It's over $2,000. Do you realize the probability of making that? It's slim to none. It's literally slim to none. See, this is why the Analyze tab can be such a useful tool. Why? Well, this is the at expiration. And guess what? Expiration is when you can't trade anymore. That's expiration. It's the Saturday after Friday. Can you trade then? No. Can you hold this trade till then? If you do, you're going to take an astounding amount of risk, because the spiders, you know, you're going to be assigned. The spiders are like, you know, they're settled into what? Well, the spiders are actually settled directly into an ETF shares. So if you look at this trade, if you think you're going to make anywhere near $2,000, well, you haven't figured out how to use the Analyze tab yet. Why? What's the first thing I told you to do? Don't use this +1 at expiration. Go down here and day step it. Day stepping is incredibly valid. What day stepping will tell you in here is you can't even make $500. Now this trade expires on November 4th. So let's okay, I want to be the John Madden of the screen again here. So this trade expires right there on November 4th. And here we are, the day before expiration. Here's the day before expiration, because this line represents right there. That's the day before expiration. You still can't even make half of what you thought you were going to make on the trade. And the trade's going to cost you $640. It's going to cost you $640 if you do 10 contracts, and you can't make squat until the day before expiration. That the butterfly, again, it doesn't perform. It doesn't expand. See, the thing about butterflies, okay, here's the best analogy I can give you. They stay in their cocoon until 2 days before expiration. If you don't believe it, look at the risk graph. See, the risk graph can help you separate, all right, fact from fiction. But you got to know how to use the features. The reality is you're probably not even going to hold this trade to November 3rd. You're probably going to hold this trade the latest. Here you go. Like this, you'll hold the trade maybe until October 30th. That's just a few days before expiration. The most you can make on it is like $500. And yet, if you're to place this trade, if I hit confirm and send, that little trade is going to cost me $640. And then everybody thinks you can make $2,360 on it. And you go to like some options class and like, oh yeah, you're going to make $2,000 on it. No, you're not, right? In all my years of trading, I have hit maybe 3 butterflies smack on. And I've done thousands of these trades. I mean, we used to place butterflies, 10, 15 of them a month back in the day because, well, they were less efficient than they are right now. But that's like the cool part of the analytics tab is it lets you see between that. Okay, so let's go through, let's delete that particular trade out. Now, once again, we're going to start to step things up a little bit. All right, so, and by the way, don't worry about the date on the top. Somebody was mentioning the date on the top. Don't worry about the date on the top because that's only if you want to see probability. It's only if you want to see probability. All right, so I like that. All the butterflies flew away with my money. That's because you learned a butterfly. It looked like a good trade, but it's not reality. All right, so once again, let's go back. Let's reset the entire analytics tab. Let's start to throw some more serious trades in here. So now we're going to go in. We're not even going to go into the spiders. Now we're going to go to the SPX. Now it's getting serious now. So I'm going to go into the SPX, and I'm going to go 80 some odd days out. I'm going to open up a ton of strikes. And bear with me. I know I move at 500 miles per hour on here. There's an expected move of $133, so 86 days out. I'm going to go in and I'm going to build an iron condor. An iron condor. For that, people, I need delta. So let's go out here. Let's sell a couple of these. Okay, so what did I just sell? I sold the 2280. Ooh, wow, that's out of the money. It's far out of the money. Sold the 2280. Let's buy the 2290. All right, so I just sold a call spread for like what? $1.15. Let's go out of the money on the put side, going down to the puts, going down to the puts, going down to the puts. Let's go in here to the a little further, about 11 delta. That's fine. Let's go to the 1910s, 1900s. Done. Okay. So I built an iron condor. It's a 4-legged beast. I right-click on it. I come over here to what? Analyze the trade. So now that I'm analyzing a trade, once again, I have positions on. I need to come over here from Show All, Hide Positions. We're now just looking at the simulated trade. This, ladies and gentlemen, is an iron condor. So it's an iron condor. Now, the fact of the matter is, again, looks pretty good at expiration. I know I've got a lot of risk in the trade. Let's start to really break down the analytics of it. Change this over here from +1 at expiration, go to day stepping. Okay, this is how the trade is truly going to mature over time. That's really cool. Okay, does it look like a distribution curve? It should. That's what iron condors are really about. Now, I may never hold this trade until expiration. Nevertheless, I'm looking at the trade at different points between now and expiration. The next thing I might want to do, I might want to go out there and verify probability. If I'm going to verify probability, this is a December 30th trade. Come out here, make sure you click December 30th. Well, let's go to December 31st. Yeah, end of the year, December 31st. Now that I've gone to December 31st and switched the date to December 31st, I can come over here to the magic slices over there, and I can start to set slices. Now I can set slices on break-even points. And you're like, oh, okay. So I can see what's my break-even point between now. All I'm saying is between now, and again, that was November 3rd. This is not break-even point to the end of the trade. And what's interesting about it is if you start to zoom in, okay, there's only, and again, I want to show you this, there's only, and it's really hard to see because it's right in there. There you go. There's only a 43% chance of being within the break-even points. Wow. Scary. Very, very scary. Now, things are going to get crazy here momentarily because now I'm going to throw tools at you and stuff that you ain't never seen before. Okay, so here we go. There's no more Mr. Nice Guy right now. We're gonna start to have to roll with the punches. All right. So when I trade, I don't necessarily just trade defined risk strategies. I will go out from time to time, and I may actually sell some options naked. And that's just the reality, right? You're building positions over there. So let's say I go out there and I also sell some puts, some way out of the money puts. And I sell these naked and come over here to analyze the trade. So now I'm analyzing an iron condor with the sale of some naked puts. Then I come back to this trade tab. All right, I go a little further out in time, maybe to the D's, okay, and I decide to sell a call naked. No, listen, I'm just putting in what appear to be fairly obscure trades, all right? Nevertheless, I'm starting to build a little bit more of a position. So now I've got 3 positions in there. Then I go out there in the SPX and I say, you know what? Okay, I got a little too much of this, a little too much of that. Maybe I want to hedge off my position in the short term. So I go out to this, let's use the 21-day options. Okay, here, I got even a better one for you. Let's come out here right to like November 9th. Why November 9th? Yeah, I don't know, it's like the day after the election. You're like, well, what happens if this happens? And I gotta put on a little bit of a bearish position out there to hedge my risk just in case, somebody gets elected and the world doesn't like it. So I go out there and I, put a little bit of a hedge on. These are all one contract trades. So we're starting to build a little bit more of a position. Now come in here. I'm going to reset my slices. Okay. Now that I've got a multitude of positions, this is what the risk graph looks like for all those positions. Now don't let that intimidate you. Okay. We're trying to show how this position would be maturing, okay, over time. And it looks very, very similar. And I can say, what happens if I took this off? Put it on, take it off. Take it off, put it on. Take it off, put it on. What I'm doing is just checking and unchecking trades. That's it. What would this look like without the iron condor? With the iron condor? Without this? With this? All right? So I can just check on and check off trades. Now, where do things really start to get interesting? Okay, you ready for it? When I build a larger position, I come in here and I go set slices. And I set slices in like rows of 2% steps. With 2%, forget about the risk graph. By the way, when you start to get to this level, this risk graph, Don don't need no stinking risk graph. Okay? Forget the risk graph for just a second. What you're doing now is setting up a risk array. Start looking at the P&L. Oh, do you see it? We have the delta, the gamma, the theta, the vega. And I promised myself I wouldn't get too deeply into the Greeks tonight, and I'm not going to get too deeply into the Greeks. But delta, gamma, theta, vega, P&L in the day. So what is it telling you? If the market rallied by 10%, you're legitimately going to lose $13,000. Easy enough? If we sold off by 10%, if the market crashed and burned, you're going to lose like $3,000. That's today, now. That's here and now. Why? The date. Forget about the date box up top. That's nothing more than probability. You don't need that now. We're looking at the date today. As this trade starts to mature through time, look what I'm doing. I'm pushing the date forward. As I push the date forward, now I've actually gone to what? October 13th. What's happening in my P&L? It's getting better. Why? Because these trades are collecting time decay. So as I start to push the date forward, the P&L gets a little bit better. Not spectacular. Listen, I'm not trying to build a spectacular position over here. I'm trying to show you reality of trading. I can see now what if the market goes up 10% or down 10%. And if 10% isn't enough, you know to set the slices now. Here's 11 rows of 3%. Oh, that's the market just, marfing all over the place. It's down 15%. But you know what? Okay, when you've played around with this, come in here, reset parameters. I just reset the parameters in the trade day. And I'm going to come back to reset slices. Do it again. Take the slices, set the slices, get this. I'm now going to go 11 rows of 2% step. This is insane, right? Because you got up 10%, down 10%, up 8%, down 8%, up 6%, down 6%, up 4%, yada, yada, yada. Got it. Timeout. Take the date. I want you to push the date forward. And I want you to push the date forward right until, I don't know, the beginning of, let's say, November. I don't know, November 3rd. In fact, let's just go right to the election day. Because there's going to be risk out there. So by election day, you know there's going to be risk. The market's going to get wild. Now you can actually see what your P&L looks like. But here's the difference. There's a little sprocket right down below over here. That sprocket, click on it. What clicking on the sprocket ultimately does is it allows you to adjust changes in volatility, even yield. Leave yield alone, leave interest rate alone. You don't need them. You know, the interest rates. Janet Yellen comes out of the woodwork and says, what, that she sees her shadow for 6 more weeks? 6 more weeks of winter. Yes, Janet Yellen here at TheoTrade is actually Punxsutawney Phil. She is. She's Punxsutawney Phil. So that's a groundhog if you're not aware. Anyway, push the date forward to basically it's about a month from now. And then you can adjust volatility. You can adjust price. You can adjust any parameters. There's more parameters. You can even adjust individual volatility in each unique expiration. But you see this volatility adjustment? When you do the volatility adjustment, if the market's going to tank, volatility is going to go up. And you can just start clicking the volatility up. You're like, oh no, the humanity, right? So you could just push the volatility up. That's kind of cool. Come back here, reset parameters, reset the date. Takes you back to today. Again, fast forward a month. Let's cruise right to November 8th. It's a party. You don't have to adjust volatility because I got a better tool for you. Now, oh yeah, now I'm going to get really serious. Okay, pull this thing down. As you start to pull it down, and what I'm actually going to do is also I'm going to reset all the parameters. I'm going to reset the date. So reset the parameters and the date. This is exactly what the trade looks like today. This is your P&L graph, right? Here's all those price slices and the P&L graph. There's a slick little feature up top over here. Instead of day stepping, it's called vol stepping. What vol stepping is going to do, wait for it, it actually shows you what your trade is going to do at a multitude of different volatilities in the marketplace. Now, if you're totally lost, sweet. Okay, we've done our job here at TheoTrade because there's only like, I don't know, a few hundred people that even know this feature exists in here. What it is the feature shows you at a 14 vol, a 19 vol, a 23 vol, a 29 vol, and a 34 vol. It actually shows you your P&L at different volatilities. So if the market tanks and volatility explodes, you know what it says here? You are screwed. You're going to get killed for the tune of almost $10,000 with an explosion in volatility. But that's today. See, that's today's date. So what would actually happen if I erase the drawings over here? What would actually happen if we fast forwarded like, I don't know, like a month? So now I can take the date and actually push forward, boop, 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 fast forward a month, and it actually, okay, it's not as bad because what happens a month from now is volatility has less impact. But for those of you that are really total geeks, you go in here and it's called, dude, like people call like, you got to learn about Vega weighting. People talk about VAMA and Vega weighting. All of that's total garbage. If you're a retail client, you don't have to worry about that stuff. But if you're curious, sure, we know our options, right? We can go in here, we can actually do Vega weighting and VAMA and all the yada, yada, yada. So I can actually move individual expiration volatility higher or lower. It's fun. Okay, now reset all the parameters and date. All right, come up here, change it back from vol stepping to day step. So this is the point where everybody's like, holy crap, I am hurting. It's okay. Again, that's why it's recorded, right? So now let's go in here and let's not play around anymore with this just day stepping. Did you know you can do P&L like days? You can actually look at delta. This will actually show you and graphically represent what your delta would look like, all right, through periods of time, which is really, really slick. It doesn't look like that much inside of the SPX, but it's huge, huge. So you can actually graphically represent gamma, okay? The gamma, the only time the gamma is going to matter, apparently when you start coming closer to expiration, you can actually graph theta, Ooh, different, levels of theta over there. Vega, because people always say, like, you can't do cool volatility things in Thinkorswim. No, it's just they don't know how to do cool volatility things. This is actually looking at Vega and the future of Vega, which is also known as something called VAMA, all right? And then Rho, interest rate effect. Oh, yeah. Yeah, wait for it. You're a geek if you look at that. Anyway, you're a geek if you look at any of this stuff. But it's all pretty much there. So think about a marketplace. Like, here's the one thing I really pick on people for a little bit, and I'm just going to go for it, right? So people all the time, they come to TheoTrade, they're a client for a while, and they always hear about some other trade, and they're like, well, this guy did a back test on it. Okay. By the way, it's always an engineer. So if you're an engineer and you're listening to this, yes, I am talking directly to you. Okay. By the way, engineer includes software geek. Yes, you're an engineer, right? Retired engineer. You went to school for engineering but went into management. I'm sorry, you're still an engineer. Admitting it is the first step. It's always an engineer. The engineers love to go and they love to back test stuff. Let me tell you about back testing. Why? Okay. What is an option? It's nothing more than an equation based on a model. So once you know that, this is a stenciling model, a binomial model, the Black-Scholes model. Okay? Do you need to know your models to trade options? Absolutely, without unequivocation, no, no, and more no. All right? When I first got involved in trading, it was the late 90s. I was right out of college, literally 3 weeks out of college, okay? And I got into option modeling. Why did I do it? Because I had a minor in chemistry, and the option models are direct ripoff. All right? Yes, Fisher Black, Myron Scholes, Merton won a Nobel Prize, but they're a direct ripoff from a heat of reaction equation. So engineers, come on. Somebody's like, be nice. No, 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 you're an engineer. I can't be, right? By the way, I think I was supposed to be an engineer. That's why I think I pick on them. I'm an in-the-closet engineer. Anyway, I got into option modeling very, very heavily, and because it's a rip-off off a physics equation, a chemistry equation. Anyway, so I understand them. They make absolutely no money. Like, you don't make money understanding them. The important portion of the option model is just understand that you can change the variables. What are the variables? Stock price can move. Date can move. Interest rates can move, but don't worry about it because interest rates never move. Yield. But if yield moves, it automatically updates the yield here on Thinkorswim. Volatility adjustment can be important. Or if you're a total geek and trading millions of dollars, yes, you can do VAMA and Vega. But nevertheless, all the parameters of the model are there. By the way, leave the model alone, the stenciling model alone. Just leave it in place, okay? You're better off that way. Now, we're going to take it a step further. So we showed you, there's include, exclude commissions, day stepping, okay? We showed you could change to delta, gamma, theta, vega. This probability in the money, out of the money, probability of touching, not too exciting, right? It's just a different probability mode. Probability in the money. What's the difference between in the money and out of the money? Well, if you have a 20% chance of being in the money, then you have an 80% chance of being out of the money. So all it does is inverts the calculation. Not too much. The date adjustment, this date adjustment is important only because the date adjustment moves that shaded region, right? Then we get into the price slicing. The price slicing, the way to think of the price slicing is it's a glimpse into your future. It's a risk array. And why do they call it a risk array? Is because the risk array doesn't know what direction the market's going to go. I always poke fun at people because they're like, when they first get involved in this business, like, I know exactly what's going to happen. I go, what? We're going to go up 2%, down 2%, up 4%, or down 4%? And they go, what do you mean? I thought we were going to go up or down. It's more important to know what the risk is, okay, than to convince yourself you know what's going to happen in the marketplace. Now, even more fun. What's even more fun in here? Erase the drawings, come back over here to normal. You can actually click directly on these P&Ls. All right, your screen's not flashing. I'm clicking like a madman on it. It'll actually show you the average price that you sold this trade for or bought it for, and the simulation price based on whatever changes you've made. So there's a very similar to, it's an option model, but for the most part, what you can do, and I was picking on the engineers there because they back test stuff, and back testing, great. It's awesome that it worked in the past. Okay, past performance is not indicative of future results. I hope you guys recognize that. But what's good about the Analyze tab here is that you can forward test strategies. How do you do that? Well, here's a strategy. It's a mishmash of crap, but here's a strategy. What are you going to do? Move the market up, move the market down, okay, raise the volatility, do a little dance, you know, whatever, and you can see what your P&L is likely to be. And you can click directly on the P&L and see simulation, what you would be making or losing on any specific date. So I think that very often you need to recognize that you can forward test. And, you know, I'll do session after session here at TheoTrade, and we're in the chat room. I do all these coaching sessions, but I'll do session after session and stuff like forward testing. I don't think people totally get it. They'd rather back test, but I'll show you the reasoning for back testing. Now, let's move on because I don't want to run out of time. I've got about 20 minutes left over here. We're just getting to the good stuff, right? Delete all the simulated trades. Okay, I'm going to reset the entire Analyze tab. Now, there are some definitive limitations to the Analyze tab, and I want to bring one to your attention right now. This is highly, highly sensitive information I am about to give you. Go in and type in Netflix, okay? And just type in Netflix. What do you see in Netflix? All right. Number one, Netflix has been flying high lately. Everybody's bidding on Netflix, okay? I'm kind of bummed. I don't want Netflix to get bought. Not by Disney, not by anybody. I like Netflix. I've actually followed Netflix, the company, since, and I never owned any stock in Netflix. I've traded the options in latter years, but I've followed this company almost since inception. And the reason I followed Netflix so carefully is the private equity company that bought a portion of Thinkorswim also invested at the exact same time in a small startup called Netflix. So I knew the guys at the private equity company. By the way, that private equity company, they exited Thinkorswim very profitably. They exited Netflix very profitably. And they put a lot of those eggs into they were first round into a very large company called Facebook. They were first round Facebook. So pretty sharp little monkeys that they are. It's actually one of the largest private equity companies on, you know, or in the Silicon Valley now. Anyway, by the way, it's called Technology Crossover Ventures. This guy's been around for a long time, but I bring up Netflix not for that reason. I'm just bummed to actually see it go. It's going to be gobbled up. Twitter, I'm happy to see Twitter go. Buy Twitter, pack your bags. Maybe you can go along with Yahoo. Eh? Yeah, maybe. You know, Yahoo. Yeah, we should merge Yahoo and Twitter. Here's a match. Here's a match for you. I don't like either one of those. Anyway, this is more technology. I want you to see there's an earnings announcement coming out. That's what I wanted you to see. Nothing more than the earnings announcement. How do I see the earnings announcement? Sure, I could go over to a chart, but a chart's cheating. You can see the actual earnings announcement. It's coming up 10:25, but I see it in the options chain because the options chain jumps in implied volatility. Now, here's one of the most important things I can teach about the Analyze tab. When you're analyzing trades before an earnings announcement, listen to me. Do not use the Analyze tab. You're like, what? Are you out of your mind? Okay, the Analyze tab. Bear with me for a second. I'm going to go in here. I'm going to analyze, okay, for the next 16 days. That's it, just the next 16 days. I'm going to analyze, okay, buying some spread. Or you know what? A lot of people like to sell spread, so yeah, what the heck? Let's go out and sell spread. Let's sell an at-the-money spread, sell a $2 wide spread. So I'm selling, $3 wide spread for about $1. I'm going to right-click over here, come over, and by the way, I think I did the opposite. I'm sorry. Here's a $3 wide spread sold for $1. Let's go over here to analyze the trade. So there it is. Selling a put spread. It's a very bullish trade. Okay. I come in here and I want to set the probability date to what? October 22nd, because the trade expires on the 21st. It's the last time I could trade it, so I set it to the 22nd. Then I come in here and I can actually set the slices. Set slices to break even on the 22nd. Shows me my break-even point, and it gives me probabilities of above or below. time out for a second. Those probabilities are 110% wrong. The probabilities that it's telling me in the Analyze tab are wrong, okay? And 99.9% of people that use the Analyze tab have no idea why it's wrong, and I'm going to show you why it's wrong. When you're going in here, by the way, somehow I switched back to Apple, so I do apologize because I was clicking wildly on here. But when you go in here and you start to analyze a given trade, okay? When you go in there and you analyze a given trade, you're looking, and I thought I typed in Netflix. Apparently, I just thought of Apple. Maybe they're going to get taken over next. I don't think so. When you're analyzing a trade, here in the trade tab, the volatility is 19%. Look, I did a trade that was in the October expiration. Trades in the October expiration, 19 vol. Look down below over here. Under option statistics, it says 25.46 vol. The Analyze tab is actually using the 30-day volatility. You don't see it anywhere in the Analyze tab because it's not listed. It's only listed under probability analysis. Under probability analysis, it's actually showing you the probability of being above or below a specific point based on a 25.46 vol. The only problem is in the next 16 days, there's only a 19 vol. You would have to come into the Analyze tab, know this, okay? You would have to know this, and you would have to literally click and adjust the volatility all the way down, okay, to 19%. If you don't do that, the Analyze tab is wrong. So as I'm doing this, again, I'm adjusting the vol down to like 19%. Good, done. Now this risk profile is correct. It really has a 60% probability. Very, very few people know that you have to adjust the Analyze tab to account for the correct volatility, especially around earnings. Now, this is a little bit about the risk graph. You realize, again, we've spent a vast amount of time right here on the risk graph and price slicing because those are the most important features. Like hands down, that's the most important features. This probability analysis, it's easy. Now we're going to talk a little bit about the probability analysis. Then I'll be able to, okay, go and answer some questions. By the way, I adjusted the volatility. You can adjust the volatility just by clicking on this little sprocket. There I am clicking on the sprocket right here and can adjust volatility up or down, right? Okay, probability analysis. All that probability analysis happens to be, forget about everything that's on the screen other than the cone. It's probability cone. It's a probability distribution based on a certain volatility. It just gives you the probability above or below specific points. Anywhere you drag the mouse on the screen. If I click on that point, I can actually drop slices there. Okay? Anywhere you drag the mouse on the screen, it'll give you here the probability, and if you look right where I'm at, and I'm gonna actually show you again. I'm dragging the mouse like a wild man on the screen. Where it stops, nobody knows. Okay, I'm gonna click right there. What is there? Apparently I clicked, and I'm gonna draw this out for you. I clicked on 118 and 22 cents. Right, 118 and 22 cents. That's what I clicked on right there. Okay, it just gives me the probability above or below by specific dates and time. That's it. That's all that this does. But what's really slick about it that very, very few people realize, okay, erase some of these drawings over here, very few people realize you can even use this like intraday. It'll actually give you probabilities above or below a specific level, even intraday. Now, what's the difference between this and the probability in the shaded region here? Well, there isn't one. The probability, though, in the shaded region here is one-dimensional, meaning that the probability here only shows you by what? October 22nd. In the probability analysis, it'll show you every individual expiration. In fact, it'll even show you by any date and time. So wherever you drag your mouse, it's above or below a specific point. But if you're going to use the probability analysis, you must make sure that you've set the volatility to the correct expiration. You see here in the trade tab on Thinkorswim, if I open up the trade tab on Thinkorswim and I use what's called the probability tools here, like probability in the money and probability out of the money, those probabilities use a separate and distinct model, okay, than the probability calculator that's over on the Analyze tab. This is a fairly complicated idea, but these probabilities here in the Trade tab are based on this options mark, which is the mid price. The probabilities here in the Analyze tab are based on a fixed volatility, an average volatility of 19.66%. People continually ask me, which one do you use? Well, I'm going to be very specific about this. I would use this probability analysis only with index and index related products, spiders, SPX, Russell. Use this curve. When it comes to equities, use the probability analysis right on the Trade tab. There's no and, if, or buts about it. Use the probability in the money, out of the money on the Trade tab. It's going to save you a headache because you don't have to change the volatility then, right? And I know that this is like wildly complicated stuff the first time you go through it. So again, this probability, it looks like so complicated. It's really not. It's kind of a joke now. It really is not complicated at all. In fact, this cone, one of the features I wanted is I wanted this cone. So I'm not a chart kind of a guy. I don't know if you guys realize that, but you know, I don't need no stinking chart. But you come over here to studies, and you can actually add study. Go to volatility studies and go under probability of expiring cone, and you can actually pull the cone on the chart. So people like lay Fibonacci's on top of this stuff. You get crazy with it, but again, I'm not that much into the probability of expiring cone, but this is the same cone that you find here. The only problem is this cone, if you see this 19.28, 107.29, okay, look at the cone, they're slightly different numbers. This probability cone is based on the volatility, bear with me, it's based on the volatility that's found here under option statistics. As I said, you could watch this demonstration 5 times over and still, okay, be able to pick up more and more information from it. So, all right, with that, continuing on over here, there's not that much left, I promise. It's not going to be that bad. Then we come into think back. What is think back? Forget about trying to back test different strategies. I use think back for, I mean, can you back test strategies? Yes, but it's kind of a joke, right? Because you can back test stuff. You're like, well, what if we went up? What if we went down? It's a very rudimentary back testing tool because all that think back has is end of day data. But one of the things that I find incredibly valuable inside of think back, and I do this on almost a daily basis. I'll come in here, for example, and I'll type in something like the SPX. Okay, so here's the SPX, and with the SPX, I'll go ahead and I'll open up like 15-day options, I'll open up like 16-day options, whatever it is. That's not what's important. What's important is these expected moves. It's telling you, you know what? Here is end of day data from like yesterday, but it's telling you what was the expected move going to be like today. All right, and you're like, I don't really get it. Well, this is a long discussion on expected move, but we were expecting about $11 move. That was yesterday for today, right? It was expecting about $11 move. So you go to the SPX today, what did it move? $9.24. It's pretty ridiculous, right? It's pretty close. You're like, ooh, it just missed it. Yeah, ironically, in the after hours, see, this actually is at the cash close. In the after hours, we actually moved right to it. Like to a T, we moved to it. So it was like an $11 move today. So one of the things that you can use the think back for is just look back. And, you know, one of the things also I'll use it for is, I was talking about Netflix a little earlier, and I'll go in and I'll say like, all right, Netflix, I'll go over to the chart and we'll pull up a chart on Netflix, forget about this. And Netflix has got earnings coming up fairly soon, but look back at the previous earnings. That previous earnings date was on what, July 15th. Go to the Analyze tab, back up the day. Back up the date. What do you think I'm going to go to? July. All right, let's go to like July 13th, 14th, something a little bit before that. Anyway, you go a couple of days before the earnings, and I can see the earnings, all right? They're the next week out over here, but look, here's the earnings right there. Okay, we're at all the way to 109% volatility. Stock doesn't move. and you can actually see what happens the next day. Boom! The stock gets hit by 13 bucks. Oh, what's kind of fun though is you can look at this and say the market was expecting a $9 move before earnings. What did it really move? And the next day, okay, you fast forward a day. Oh, Netflix moves $13. There's so much you can do with Think Back in terms of your own research. Like that, you know what that tells you in Netflix? Don't sell options in Netflix before the earnings. And what I'll do is I'll actually go back 3 or 4 earnings periods and I'll look, did Netflix, so like we can even go back another earnings period. Let's go back over here. It's on what? April 18th, right? Let's go back here and you go boom, back to April, there's April 18th. So here's another earnings period, okay? Netflix that day was projecting an $11 move, $11.40. What did it actually move? Okay, ooh, it moved 14 bucks. You have 2 periods now that Netflix has exceeded what it was supposed to do in terms of earnings. Okay, you can go back and do it again and again and again. You guys see where I'm going with this? That to me, this expected move is one of the most beneficial things. The other thing you can do is, you know, and I do this all the time, I'll go to my monitor tab and I'll find some trade that I have on, like right now. I've got a trade on in Google. Okay, so I've got a position on in Google. I'm down like 7% on it. Neither here nor there. But sometimes I'll actually go into the positions themselves and I'll say like, all right, so here's my position in Google and I'll click on it. All right, here's the actual position when I place the trade. This is a real trade. So I put the position on, it looks like on 9:15. So the position's been put on 9:15. And when I put the position on 9:15, I'll actually go back from time to time, and I'll go back to September 15th. Why would I do that? Because I'll actually look at the option trade, and I'll kind of like replay it and go, most of the time I'm like, what the heck was I thinking out there? Oh, that was brutal. Okay, so you got to recognize you can replay an entire trade, you know, from beginning to end by using this. So, you know, one of the things I'll do is somebody will email me and they'll be like, hey, so what went wrong in my trade? I don't know, but I can look at your trade and then I can actually kind of replay it from beginning to end and I can see where you went wrong. You know, there was low liquidity, the volatility was high, you missed the earnings, there's a lot going on out there. Those are your major areas of the Analyze tab. Again, the primary area is undoubtedly in the risk graph here. The risk graph does a tremendous amount. Okay, it takes a while to get a little bit used to. There's a ton of features built in here. Now, one of the things sometimes you do is go through, be methodical on here. That is, you know, click through it. Don't just start wildly clicking on stuff. You ever get yourself a little confused, just hit reset. All right, no problem with it. You can even take screenshots, okay? Make sure that you play around with price slicing. It's this little show actions menu down here, the price slicing on there. You know, like what happens if Google goes up $2, up $5? I mean, a $5 move is nothing in Google, but you can see the future of any of your positions. You can even set slices to charts. So that means the price slices from the risk array, you can even set those to charts. There's so many features, again, that are relatively unknown on this trading application. Just remove all the drawings because I can't have no stinking drawings on there, right? You just, again, play around with it, be methodical in going through it. Remember things like if you're going to check the probability here in the Analyze tab, make sure, number 1, that you have the date correct. Number 2, make sure you have the volatility correct. And again, there's no volatility that's mentioned anywhere here on the Analyze tab. You have to actually go to the probability analysis. It's kind of a weird omission on the risk profile over there. So I take no credit for that one. Remember, I've been out of there now for, it's coming on about 20 months since I left TD Ameritrade. With that, I'm going to be answering a couple of questions over here. So somebody's asking, what is the percent next to the expected move mean? So, all right, Michael, the percent over there next to the expected move, you're talking about in Think Back, that's the actual volatility. So that's the implied volatility. It's the implied volatility, goes through a little bit of a formula, do a little dance, make a little love, and it comes out to the expected move. Okay, if you're ever interested in it, what it breaks down to is its stock price. So it's like $800, okay, multiplied by whatever implied volatility is. In this case, it would be like 0.14, okay? Multiply that by the number of days left till expiration, right, which is the square root of it. So that's like what? Let's say 15 days divided by the square root of 365. Multiply that. That'll equal the expected move. You're not going to be able to solve exactly for the expected move. It's there is one secret, you know, that well, there's a lot of secrets, but they've got some, you know, some kind of trade secrets and that they reserve at the Thinkorswim, you know, on the Thinkorswim platform. So, you know, how they actually derive volatility for the expected move calculation, it's one of them, but this is like a rough estimate of how to do it. Its expected move calculation has been around for a while, but what's more proprietary is how you actually solve for volatility on this trading application. All right, so how to use probability of touching. Oh, Bill, that's actually a long one. Probability of touching is an amazing calculation. In fact, I'm going to be doing a session in 2-3 weeks' time, all about probability of touching out there. Okay. By the way, yeah, it does mean percent move in price. It means percent move, but it's annualized. Okay, it is annualized over there. So all right. Just reading into this. So I only pick on engineers. No. I'm an equal opportunity, you know, picker honor. We pick on engineers here. We pick on Canadians. Why? Because nobody else is doing it. Got to be revolutionary, right? Got to pick on Canadians. I feel bad for actually all the Canadians because they, you know, they don't have like the full-blown Thinkorswim. They don't have access to the U.S. accounts. That's not good. That hurts. Okay. Can I see my whole portfolio in the Analyze tab? Absolutely. One thing I did not cover tonight, okay, is you can come in here and go single symbol, go portfolio beta weighted. I want to see my entire risk. Now, I'm going to go portfolio beta weighted, hide all the simulations, okay, and I'm actually going to portfolio beta weight directly to the spiders. This is my position right now, okay, in all of its glory, for better, for worse. I'll even put the Google position in there. I'm short 6,500 spider deltas. It's my aggregated position right now. I'm short. Okay, so I did not cover portfolio beta weighting to really any extent. I figured, you know, I've already dug a deep enough rabbit hole for us tonight. Do you like earnings? Okay, earnings trades, frankly speaking, they're not working. I mean, I know some people sell spreads around earnings. Listen, earnings trades worked many years ago and are still taught, and I don't love earnings trades, and I'm not gonna tell you that I'm finding edge in earnings trades. You know, I'm a much more quantitative trader. I'm not about technicals. I'm not gonna, you know, well, the Fibonacci says this. Okay, I don't care if the Fibonacci says that. There's nothing definitive in there. I'll look at thousands of trades, and I'll tell you where there's edge and where there's not edge. And I'll sit here all day and go through and like, well, did this work? No. Did this work? No. Did this work? No. Okay. And there's just no edge left in earnings trades. There hasn't been for a long time though. So I don't mind answering that out there. And I hope you don't, you know, anybody's offended by that. Okay. You know, to make a couple of bucks a day, I'll tell you one of the things. If you guys have time, the intraday trades right now, intraday, like trading throughout the day, it's where it's at. But what we're using a tremendous amount of here at TheoTrade, we're using in-out spreads. Okay, the in-out spreads have been the go-to strategy for me for pretty much since March of this year. And what the in-out spread basically does is it circumnavigates time value, it circumnavigates volatility exposure, and it's just looking at what's called probability of touching. It's just trying to make a few pennies, okay, right off the top. I say a few pennies, but it's much more than that. We try to make about 55 to 65% and bail out of a trade. So, all right, not too many more questions in here. And again, probability of touching is a long and drawn out conversation that we'll absolutely get to at some point in the future over here. Again, I want to thank everybody for joining us tonight here at TheoTrade. Sorry for the initial disruption we had with some flashing on the screen over here. Nevertheless, it has been fun. Again, we can analyze umpteen different styles of trade. There's only so much you can get to in one evening, and after about 90 minutes, the head is full of information. So, sit back, play with it, analyze a couple of trades in there, everything from calendar spreads to multiple leg spreads over there. Remember, fact from fiction, that is, don't look at trades at expiration, because expiration is nothing more than a figment of your imagination. You're never going to hold trades to that point anyway. Again, I want to thank everybody for joining us. If you guys need anything, we're support at theotrade.com. Have a great evening, everybody. Bye-bye.